Hi there, welcome to Kneppy Invest and welcome to August the 8th, 2024. We have almost 1.5 hours left of trading today, and that includes a closing auction. And who knows which way the closing auction might go because we are seeing a sea of red. Everything is down. Tech was up for portions of today, so a little bit of volatility in the market, which is understandable because the American markets were quite volatile. And when we are or when sentiment is negative or volatility is high, well, that makes sense. I was going to say when volatility is high, you do tend to see way more volatility in the market, and that's exactly makes sense. So VIX is high right now, which implies that there's a fair bit of volatility in the markets, fair bit of fear in the markets, and when there is a bit of fear in the markets, we do see more volatility, and that's exactly what we are seeing right now. Now, which way the market's going to go from here, I have no idea. They could go up, they could go down. I have seen differing opinions everywhere. Twitter, YouTube, no one really knows. They may say they know, but they have no idea. Like Stephen Van Meter, he thinks it's going to go down, but will it? He's been wrong plenty of times in the past few years. Anyway, an exciting day in the market simply because we are finally starting to see companies release their financial results. The last few days we have been it's been a bit sparse in that regards, but finally today, about 5 or 6 companies have released their financial results, albeit boring type companies. We're talking about infrastructure, Reit's financial company released their results today. Now, even though I would classify all the companies releasing their results today as being boring, among the boring companies, I do see a bit of ray of light in one of these companies. There is a possible breakout. Share price of this company is up about 10%. Now, this is probably one of the most disastrous stories on the ASX over the past 2 decades. I'll show you the chart for this company, but the share price is up 10% and a possible breakout. So I do have to include that company in the top 5 stocks of the day. In fact, this company comes in at number 1. The other 4 companies in the top 5 stocks of the day either release their results or release a trading update. So we do have my favorite type of announcements in the top 5 stocks of the day: financial results or trading updates. Few other companies release trading updates or their financial results, and I have not included those companies. So I'll mention these companies briefly during the video. So what do I have in store for you in today's video? I've got one tweet. In fact, before I start recording, I just went through Twitter just to see if there was anything interesting out there. And there was a tweet from Roger Montgomery. Now, when I think of Roger Montgomery, I think of bull, someone who is bullish on the market, and his tweet was a little bit bearish. So we'll have a look at that particular tweet, and then we'll have a look at the ASX today, go through the best and worsts of the day, sectors, indices, and also companies. I might have missed something because I haven't gone through this stock scan recently. When I say recently, within the last few hours, I actually did go through it about 30 minutes after trading just to see if I missed something. I didn't, but that could have changed. And then we'll have a look at the top 5 stocks of the day. And in fact, most of the companies in the top 5 are bigger companies. I wouldn't say big companies or big caps. They're not small caps, big caps. I wouldn't call them the biggest companies in the ASX. A few of them are pretty big. I think the smallest one might be a New Zealand-based company, but they released a trading update. I think the second positive trading update this company has released in the past few months. So I really have to talk about that company. Might have a look at a few charts, also discuss some of the companies that did make it, and then I'll have a look at a few charts. And maybe if I have time, I'll have a look at a few comments that you have released on my channel over the past 24 hours. Okay, so let's get stuck into it. This tweet from Roger Montgomery, and probably this is not his own sentiment. This is him looking at information out there and saying, well, the information out there, particularly when it comes to consumer sentiment, is souring. In fact, when I first read this, I thought he wrote consumer sentiment is soaring. So just one letter difference, you get a wholly different vibe, soaring instead of souring. So consumer sentiment is souring. It makes sense. And the reason this is important is because when we are negative about the outlook of the economy, more than likely we are going to spend less, and that will have a significant negative impact on the economy. So consumer sentiment is important. And he goes on, make no mistake, Baron Joey's survey of 1,000 consumers, you might say, well, that's a small sample size, but but I suppose it's enough, revealed a sharp deterioration in financial security expectations and purchasing intentions. Meanwhile, cars on dealership lots are rising fast amid a slump in June sales, which dealers are expecting to continue. Why? Forward orders and inbound inquiries have fallen off a cliff. Perhaps even if inflation isn't falling fast enough, the RBA might be loath to raise interests. And then someone says AP Eagers will be a great pickup should this translate into a share price reduction. Possibly. Actually, AP Eagers could be that sort of company. When the share price and the sentiment in that sort of sector plummets and falls, that would be a great pickup eventually. And I'm not going to really talk about that. It is further maybe evidence or signals that there is a possibility, or maybe better way to say that is a greater chance that we are moving more towards a recession. Now, I would argue Australia's already in recession because if we didn't have immigration, GDP would be going down. So, GDP per capita, per person, is actually going down. It's only immigration that has propped this country up. But more importantly, is United States moving towards that point? And I think there's a chance it is. Just a chance it is. So I'm not one of those people who thinks it's an absolute, or one of those people who thinks it's a no chance. I think it is a chance. It's going to be interesting because over the last few months, I have, of course, I listened to Ausbiz Report, and quite a few of the commentators on that channel have been quite bullish. They're saying we're in a bull run. And I'm wondering if they're changing their tune, if they're looking at this information going, oh, maybe I am wrong. A few, I won't mention the names, but a few of them have been quite bullish over the last few months. In fact, one of them said we're at the start of a bull run. Anyway, let's have a look at the ASX today. Red, not a surprise. A lot of volatility in the American markets. I believe the Nasdaq opened up about 2% higher, closed about 1.5% lower. We are going to see that and see that pretty common over the next few days, next few weeks, possibly over even the next few months. And all depends on which way the economy goes. Now, possibly these weak economic numbers in America could have been just a one-off. Maybe the next numbers will be pretty good, and that will significantly change the sentiment if it happens. Small caps, bad day. So remember, there's massive rotation into small caps. It ain't happening anymore. It's changed. I would say, if anything, there is a rotation into defensive companies now because investors are being a little bit more, well, when it comes to risk management, sort of like what I'm doing, I'm increasing my cash. So when people are a little bit more fearful, their risk management will trend towards safer assets, defensive assets. So we're talking about Woolworths, probably a classic defensive asset. And they'll be getting out of the small caps. A little bit more risk. Well, maybe not a little bit. Way more risk in some of those small caps. And mining, pretty bad day. Not surprising. I had a look at the copper chart. Bad. It's looking bad. And again, that's a sign of what the world is thinking about, well, the copper market is thinking about the economies throughout the world. Tech's not a bad day. Not sure what's happening with tech, particularly because the Nasdaq was down a fair bit. Anyway, let's have a look at the sectors and indices. And it's been all over the place. Wasn't that long ago. We're talking about 139. They were up. Looks like they were up for the day. Yeah. Well, not all three. Two, the tech and what was the other one? XJ were up for the day. And at one point today, the XJ was down about 0.7, 0.8%. That was about 11.45. So in about 2 hours, went from being down at 0.8% to being slightly up. Now it's going back down. So a lot of volatility. And I would assume, and this is just me assuming, this is either being driven by the Nikkei. Let's have a look. Look what the Nikkei doing. Well, it depends which one you look at. I have no idea which one to look at. There's a Nikkei 225 and there's a Nikkei, and they're slightly different. I don't know which one is the one I should be looking at. And probably the other thing they're looking at, the Australian investors are looking at, is the American futures. And I don't know if I can look at American futures in this. NASDAQ futures. I have actually never tried. Let's have a look if this comes out. I don't know if this would work. I should try this without, should have tried this not in video format. Okay, so what I'll do is just go CNN pre-market. I started looking at this back in 2019. Not every day, but on occasion I will look at this. And yeah, the futures are down. Well, Dow futures is down, S&P futures is down, Nasdaq is up slightly. Last time I looked earlier today, they were all up significantly. So we have seen the futures taking a little bit of a hit. And also, apparently, according to this, extreme fear is driving the US market. In situations like this, yes, that's absolutely true. All right, so that's the what's happening today. A lot of volatility. Financials good, staples good, which makes sense. Utilities good. So a few of those are defensive. In fact, if I had to name the 3 defensive sectors, I would say financial, staples, and utilities. Possibly healthcare as well. Definitely not IT. And those non-defensive, real estate down a lot, materials down a lot, energy down a lot. I don't know if I'd call real estate defensive. Yeah, I don't know about that one. So I'm not sure what's happening there. Yeah, I don't know. That means Goodman Group's probably down a fair bit. Banks have had a good day, according to this. And let's have a look at the ASX 20. So we know banks, staples. So I'm assuming all the major banks are up. Woolworths is up. Probably Transurban's up, or depending on their financial results or the market view of their financial results. Maybe CSL is up, and definitely down Goodman Group. Probably the mining companies, most of the mining companies, including energy companies. So I'd say possibly 10 up, 10 down. That's what I'm going to say right now. 10 up, 10 down in the ASX 20. And let's have a look. 10 up, 10 down. So there we go. Absolutely right. And let's have a look at the bests or the worst. We'll go through the best. So WiseTech. Yeah, that makes sense. It's tech, NAB, ANZ, Aristocrat, Woolworths, CSL, Commonwealth Bank. So all the ones I thought might be in there. I didn't really think about WiseTech, but Santos in there. So I expected that company to be the one of the worst performing. So let's have a look at the worst performing. Goodman Group at the top, real estate. Rio Tinto, BHP, Transurban. Obviously, the market looked at the results and went, we don't know. Woodside keeps on dropping. There's a lot of chatter about Woodside. Apparently, Woodside is being snapped up by a lot of retail investors. The share price keeps on falling. So someone's selling Fortescue down and Telstra, which would I describe Telstra as defensive? Yeah, I probably would. No one's going to, if they're in a financial crunch, no one's going to get rid of their phones, are they? And their phone plans, are they? No, they're not. So yeah, I would say Telstra is quite defensive. Okay, so let's get to the top stocks of the day. This chart watch here from Carl Capolingo, Technical Analysis, I don't usually look at this. So I do recommend looking at this. I'm going to open it up and look at it later. No, not now. I'll look at it later, after I finish this video. And it won't open up now. Okay, let's go to the top companies, stocks of the day by percentage change. A company called Heavy Minerals is up 54.64%. I wonder if this company is exploring for heavy minerals, maybe uranium. Let's open this company up. I have never heard of this company before. Share price has gone on a pretty good run recently, just looking at this chart. Have they released anything today? Let's have a look. Industrial mineral exploration, not limited to garnet, zircon, rutile, ilmenite. Doesn't sound, those could be heavy, but I don't know. And what do they release today? Okay, royalty funding completed. Royalty funding, is this like a royalty company? Where's the announcement? There it is. That's raising some money. Okay. I have no idea about this company, but the chart looked interesting. So let's have a look at the chart for heavy minerals. And that's a 5-minute chart, so that's ridiculous. And yeah, for some reason, the market is liking this company right now. However, if you go back to July last year, there was one day when the share price of this company rallied 100% in one day. And that was the end of the rally. It went no further. So that's the problem with these sort of companies. Sometimes you just don't know. But you do know on that particular day, there was a lot of selling. Share price got as high as about 40 cents and then closed at 22 cents. That means there's a lot of selling. And we've seen the same sort of candlestick today, a little bit of selling, but maybe not as much. The other thing to note about today, no volume, very little volume compared to then. So this could be just a bit of a run on low volume, which doesn't get me excited at all. So that's heavy Minerals Limited. The best performing company in the ASX, up 54.64%. Peppermint Innovation, Pill. I have heard of that company, but not Peppermint Innovation. High-Tech Metals, Iseni Gold. So nothing here of interest. Beamer Tree Holdings. They did release something interesting the other day, and share price is rallying today. I don't remember the company releasing anything today. Let's have a look-see. What I should do is just do this. Beamer Tree Holdings. I'm assuming the chart looks pretty good as well. Up 19%. They just released their results. That's what it was. A really good results on the 6th of August. So that's 2 days ago. And up 17%, down 2% yesterday, and up another 19%. So this chart is going to look pretty good. This could be sort of a confirmation of a breakout. Yes, it's starting to look really good for Beamer Tree Holdings. Definitely want to put that onto my watch list if I haven't already. Yes, it's already on my watch list. Okay, so Beamer Tree Holdings doing pretty well. Most of the other companies here, they're very small. Mining, exploring companies, that sort of thing. Titomic, all over the place. Worker, Bowen Coke & Co. I noticed that company was down a lot yesterday. Now it's up, so it's just a bit of noise. So let's have a look by market cap. This is where we might see some more interesting companies. And there is AMP, up 11.5%, a potential breakout on the back of the company releasing their financial results. I'm going to talk about this more later in the video. Not going to be mentioning much about or informing you much about their financial results. It's just a market reaction that has me intrigued. Ordinate, just bouncing. It's just some people finding a little bit of value. Omni Bridgeway, don't care about that company at all. It's sort of like a lawyer company. Meteoric Resources. Elsewhere here, nothing of note. Pretty sure LT Pharma did release something today. Let's have a look. LTP. What did they release? I do remember seeing the ticker code. Men's health expert prescribes Spontan. Don't know what that means. Doesn't sound that exciting. A second men's health expert and clinical key opinion leader in Australia is now authorised to prescribe Spontan, a novel treatment for erectile dysfunction. Oh, there you go. I don't need to read this anymore because I don't have those sort of problems. But anyway, the market sort of likes it. LTP, let's have a look at the chart. I'd say this share price, this company is all over the place. Nice rise, and since that rise, up and down like a yo-yo. Okay. And elsewhere, we have, that's probably it. So we know the top stock of the day, that's AMP. Let's have a look to see the worst performing companies today. See if any of my top 5 stocks are in this list. Space Talk, all over the place. Don't want to talk about that. Could be up a lot. And when I say all over the place, just have a look at the chart. All over the place. There was one day was it last week, where it rose like 40, 50%. And now it's just going sideways. So yeah, up 50% on the 2nd of August. Although you could actually argue that this is starting to look a little bit more interesting, but yeah, I have no interest in Space Talk. What else? Although I probably shouldn't say that, because when I look at charts, it's not about what I think about the company. It's just the chart. Just trade the chart. LBT Innovations, pretty good day yesterday, down today. That's understandable. But the question is, can the share price find a little bit of equilibrium at these levels and possibly start to go higher? Okay. And by market cap. So Mirvac, yes, Mirvac did make it in my top 5. In fact, a number 2, down 9.5%. I had to include this company because of the West African Resources, down 10%. I'm going to push one of my companies out. I'm going to push Tower. Sorry, Tower, because West African's share price is down 10%. Now, gold overall has had a bad day. West Gold's down. A lot of these gold companies here are gold companies. So West African Resources did release an announcement today. So that hasn't helped the share price. Okay, so Myer Holdings down 6.9%. That's made it into my top 5 at number 3. They did release a trading update. The market has not liked that trading update. Civmec, $1.03. Appen, I looked at Appen in the morning. It was up about 2%. Now it's down 7%. Civmec, I'm going to show you the chart for Civmec. Not now, but later in the video, because the chart for CMAC really good a few weeks ago, maybe even last week. It's pulled back a fair bit, maybe 30% or so in a fairly short period of time. Okay, and Appen, I'll show you Appen as well, because the share price of that company has pulled back today as well. And even Metro Mining. Hopefully I get to the chart section in this video. Okay, so let's have a look at the top 5 stocks of the day. Now, first of all, I'll just go through some of the companies that did not make it. So Tower, I'm hoping the share price is not up by all that much. Yeah, 4.55%. They've upgraded the guidance again, and it's not the first time recently they've done that. They increased their guidance on the 11th of June. So we're talking about 2 months ago, and they've done it again. And in fact, the Tower chart looks pretty good. So I really wanted to include this company in the top 5, but it's not there. This chart looks pretty good, doesn't it? Nice looking chart for Tower. They've upgraded the guidance again. That's exactly what you want to see. And maybe I should have taken a position with that first upgrade, because if I did, I would have been buying in about 78 cents. Now it's $1.03. So that's another reason why, and I don't like these sort of companies. It's an insurance company. And that's another reason why possibly I should be less discriminatory. Don't really focus on the company. Just look at the chart, look at the announcement. That's it. I shouldn't really be being biased. Bias can be a killer. Not a real killer, but you know what I mean. Anyway, so it's Tower. Other companies that did not make it in top 5 announcements of the day include Infratil. Is an interesting one. So Tower is New Zealand based. Infratil is New Zealand based. Share price is up. And I find that fascinating because they released profit guidance, and this was a downgrade. So I thought, oh, the share price should fall. No. Now, one of the reasons why it was a downgrade was because one of their divisions, their whatever you call it, holdings, had a downgrade in itself. And Infratil mentioned that EBITDA shall now be lower. So between 962 and just over 1 billion. Previously, it was between 980 and 1.03 billion. So a slight decrease in guidance, but the market doesn't care. Share price is up. If the share price fell maybe 5%, it would have made it into my top 5. Charter long haul WALE, up a little bit today on their results. Not that exciting when it comes to the chart for this company. I should show you the Infratil as well. In fact, I might do that really quickly. So that's Charter long WALE Reit. Not that exciting. Share price is at a big discount to their net tangible assets. However, in saying that, last year it was a big discount, and the net tangible assets fell by about $1. Yes, fell about $1. So that's why this company is trading now at a significant discount to their NTA, because I think the market is thinking it could continue. The decrease in NTA could continue in the next year. And what's the other one? Infratil. Infratil is one of those companies whose share price just keeps on climbing. There is signs of possible weakness when you look at this particular chart. The uptrend, which has been well defined for quite a while. In fact, it looked a little bit weak in May, June of 2022, which is understandable because that was the last time we saw significant weakness in the market, and a nice run since then. So starting to show signs of a little bit of weakness in Infratil's chart. And another company that just released their results is 360 Capital Mortgage REIT. Now, I have not looked at these results at all. Can't even tell you. So I'll just have a look at the charts. They released their results at about 11 a.m. That's one of the reasons why I didn't have a look at it. I look at all these results, by the way, very quick looks. And if you do have a look at the chart for this particular company, over the long term, why have I never had a look at this? It's not a bad. In fact, over the past 13 years, the share price has doubled. So that does not include dividends. If you include dividends, I would assume, let's have a look. Oh, wait, that did include dividends. Okay, so if you look at the chart for this company with dividends, it looks pretty good. If you look at the chart without dividends, it looks pretty bad. That's the power of dividends. That's probably the only reason you might hold this company is just for the dividends. However, if so, over time, your capital in this company has gone down. I didn't realize I'd clicked on adjust for dividends, and now it looks a little bit different, doesn't it? Okay, so, and that's TCF. I'm going to show you also Shopify. I was going to include Shopify in my top 5 stocks today, and then I realized this is an ASX daily rundown. It's not an equity market daily rundown. So instead of including Shopify in the top 5, I'll just mention it when I look at the charts. A few other companies that released something interesting today include Platinum Asset Management released their funds under management, down again. Share price at down 1.77%. Chart for this company is awful, has been awful for the longest time. Now, this is not with dividends. Yeah, this is the weekly chart, and it's just in a downtrend. Downtrend weekly chart, downtrend daily chart. No reason to get excited about this company. Another company called Nuheara looks like it's going bye-bye. They've appointed voluntary administration. This is a little bit disappointing. I have never been a shareholder of this company, but they make like hearing, like buds, smart earbuds for hearing enhancement and also for sound, that sort of thing. And I was hoping they could make it because it'd be exciting that this sort of company could be on the ASX, but they've gone into voluntary administration. And would I have ever even been thinking about trading this? And the answer to that is no. Because the chart looks absolutely horrible. So again, the chart for technical analysis can keep you out of companies that are or might go bankrupt or go into voluntary administration. This is a really good example. Just by looking at the chart, there would be no way you were a shareholder of this company or trading this company. So that's Nuheara. It's a little bit of disappointment for me. Anyway. What else did we see today? A few other companies released their quarterly results, including Arcadium, which is LTM. Arcadium Lithium down 3.36%. And also Light and Wonder. Both of these are American-based, and their financial results are horrendous. I hate how Americans do their financial results. I just hate it. That's probably because I'm used to the American or Australian way, and I just think we are superior. Just like our athletes are superior to the Americans. We might not have won as many gold and silver and bronze, but if you take population into existence, we've won 1 gold for every 1 million people. They've won 1 gold for every 10 million people. Yes, by per capita, we are the athletes gods of this planet. I've got to be careful because there could be a smaller company who's doing better than us. Anyway, so I do prefer the way we set up or how our companies release their results compared to American companies. They just release their results. Now, a way around that I've found is if you go to FinChat, so this is Shopify, and they do release fairly quickly the transcript, report, and slides of their quarterly results. I do like this in FinChat. So I was just going through Shopify, and the reason I was going through Shopify is I'm a shareholder. Oh, I didn't notice this. In FinChat, they have after hours here. I did not know that. You notice Shopify was up 17.8%? Yeah, good results. I'll mention Shopify later in the video. So Light and Wonder, Arcadium Lithium release their results. Actinogen is into trading halt in regards to results, if I believe. Actinogen results coming through soonish. Trading halt. Some investors don't realize there's 2 pages to a trading halt. So the first page is a generic ASX announcement, and then the second page is the reason behind the trading halt. I do know some people don't realize this because in hot copper, I don't usually go to hot copper, but sometimes I will. And people say, I don't know what this trading halt is in regards. It's in the second page. And this trading halt is because of a pending announcement of the results of the Zana-Zid phase 2A clinical trial. So fingers crossed for shareholders of this company. Chart had been looking pretty good. This could be a breakout for the company if it's really good. So chart had been looking good for Actinogen. Share price did pull back a little bit, but looks pretty good at this point in time. So fingers crossed for Actinogen. Okay, so let's get to the top 5 stocks of the day. Starting at number 5, and that company is West African Resources. Wasn't originally in my top 5. Saw the share price down 10%, but overall, gold companies are down a fair bit. But they did release an announcement. Burkina Faso adopts new mining code. Now, this is a problem when you are investing in companies in these sort of countries because you just don't know what the governments are going to do. And the other thing is, investors tend to be they have very little tolerance of risk. So a slight increase in risk, oh, I've got to sell out because there's a one in 1 billion chance of this happening, but I just can't take that risk. I got to sell. I got to sell. That's what's happened today with West Africa Resources. Gold's a little bit negative today, and slight increase in risk when it comes to these new mining codes. Had a look at it. Doesn't look that significant for West African Resources just now. That's me saying just now, but we just don't know. And that's why the share price is down. I've been thinking about taking profits with this company, but they do have a new mine coming on into production within the next year or so. And I think when that new mine comes to production, this company at current levels is really cheap, really cheap. But again, sovereign risks, and in fact, the chart's starting to look pretty ugly. But the share price could bounce easily from here. We saw this a few years ago with this company when there was a coup d'etat. Is that how you say it? In Burkina Faso, share price dropped, share price recovered fairly quickly because even though there was a coup, it didn't really affect this company at all. But again, heightened risk. Wonder when, I forget when that was. It would have been maybe one of these drops here. It could have been this drop on the 25th of January 2022, share price dropped 17%. It would have been that day, and the share price recovered fairly quickly. Yeah. So that's West African Resources. Yeah, what can you say? Share price down 10.25%. But in fact, I'm going to go to my gold watch list and it's a sea of red. So other companies within this, Resolute Mining is down 7%. Northern Star Evolution down 3.4%, Northern Star down 2.9%, and Kaiser down 9.7%. So there's some other ones down here by about 10%. So it's not only West African Resources. So I don't want to put all the blame on this announcement. It's just overall negative sentiment in gold just today. And I don't think gold's that bad. Was gold down a lot? I didn't see it down a lot. I could be wrong. Let's have a look. That's down a little bit. Maybe it's to do with exchange rates. Could have something to do with exchange rates. Anyway, let's move on to a company that's coming in number 4, and that company is Transurban. Transurban did release their results today. Share price down 1.4%. It could be just market noise. I did have a look at their financial results. They released a 238-page Appendix 4E and corporate report, an 8-page results and distribution guidance media release, and also an investor presentation. Now, I did open up their Appendix 4E because I always have a look at their financial statements, and a lot of times it just goes over my head. I do find this company's accounting to be really tricky for an amateur like me, someone who doesn't really know this stuff when it comes to accounting, because I had a look at their cash flow statement and I went, nah, not for me. And I will open up, I suppose. But I might not be really reading this company accurately enough. But my probably good motto is, if you don't, particularly if you're a long-term investor, if you don't really understand the company, if you find like a little red flag, and even if you're wrong, that's probably good enough not to invest in the company. Now, would I trade Transurban? Yes, I would. But there's no point trading. In fact, let's have a look at the chart because, of course, ComSec is going to take 5 years to open up that particular announcement when I could open up in Market Index in like 1 split second. Let's have a look at the chart for Transurban. The only reason I like ComSec is it opens up a new document. Can I do that in Market Index? Let's have a look. PDF. Yes, I can. I didn't realize that. And look how quick that's opened, right? And it's still opening up in ComSec. Go Market Index. That's not the one I want. Okay, I'm going to do this from now on. It's going to open up documents or these announcements in Market Index. Well, you learn something every single day. So this is a lot of pages. So it takes a while to find the financial results. And I just want to show you the... No, that's not it. Statement of cash flows. Here it is. So I could be completely wrong and totally misreading this company. I do know quite a few experts find this company challenging. Well, their accounting challenging. Okay, so let's have a look. This is just, and you've got 2024 and 2023. So we have 2 years of history here. So net cash inflow from operating activities. $1.6 billion, up from $1.45 billion last year. That's pretty good. But then you get into the cash flows from investing activities. And there's all these statements in here. There's payments for financial assets at amortized costs. There's repayment of financial assets at amortized costs. And they sort of cancel each other out. So I'm just going to ignore that. I have no idea what they are. Capital contribution to equity accounted investments. It's fairly small, so I ignore that one. Payments for intangible assets. This is pretty significant. $1 billion. There's no note there. I have no idea. I did Google it. No idea. What I could do is chat GPT it. What is payments for intangible assets? That's one thing I just don't know. So if you know, I would love. I did Google it and there was nothing. I couldn't get anything. What is a payment intangible? Intangible asset. Well, I know what tangible assets are, but what's a payment for intangible asset? Is that just fees? I have no idea. No idea, but it's significant because it's $1 billion. I just wish they had some sort of note on that, some sort of explanation. Payments for property, plant, and equipment is only 104,000, 104 billion. Distributions received from equity accounted investments, and that payment for intangible assets, it's not just a one-off. Last year, it was almost the same amount. So this seems like it's an ongoing cost. So anyway, net cash outflow from investing activity, 760 million. So they were, at this point, operating cash flow or free cash flow positive or net cash positive, about $1 billion. However, now let's go to financing activities. They gave their shareholders $1.7 billion back in dividends and distributions. $1.7 billion. And I just thought, wait on, your net cash flow from operations was only $1.6 billion, yet you're paying more in dividends and distributions than your cash flow. That does not make sense because your free cash flow is not greater than the operating cash flow. And not only that, repayment of borrowings $1.48 billion, proceeds from borrowings $2.28 billion. So they increased their loans by $1.4 billion. Now, some of that could be because of capital expenditure or increasing their, although it's not capital expenditure, but increasing their roads, their tolls, improving the tolls. I don't know. And so it just doesn't make sense to me. You're paying more in dividends and distributions than you're receiving back in operations. It just does not make sense. So that also means the debt in this company should be increasing through time. In fact, let's verify that. I have no idea. I have not even thought about doing this because a lot of times when I look at these results for this company, I wouldn't say get stuck, but I just move on to the next one because it's just too difficult for me. I'm not smart enough for this sort of thing. So let's have a look at the debt. I just want to see if the debt has been increasing over time. I would assume it has been. So liabilities. Oh, it's not. Actually, it has been sort of going sideways. So that could be a good sign. It had been increasing from 2014 through to 2020, going sideways. A lot of people would look at the P/E ratio of this company and go, 174, that's absurd. And that's again why I couldn't explain why that's so high and why that should be a problem. So a lot of people have tried to explain it, but unsuccessfully. So P/E ratio, it's probably because of amortization depreciation, I'm assuming. And we can actually look that up. Income statement. So revenue, we'll get rid of debt. So revenue, it's not going up. It's just what you want to see. And income is much smaller. It's almost tiny. It's almost negligible some years. 227 million or 64 million in 2023. So why is that? Let's have a look at the biggest expenses. And here it is, amortization of goodwill intangible assets. It's fairly high. And I have a feeling that's to do with their toll roads, that sort of thing. And so their cash flow, the company's cash flow is much higher than the profit. That's what you've got to have a look at. And if you do look at the cash flow, in fact, I believe they said their free cash flow was about 1.6 billion. So the distribution or the dividends is about 100%. Let's have a look. So the EBITDA is 2.6 billion. Proportional EBITDA. Okay. And the distribution is about 62 cents, which is roughly 100% payout ratio, I believe. I'm pretty sure It must be in the presentation that I saw it. Pretty sure they did mention their free cash flow, and it was about 1.3 to 1.4 billion, which is significantly higher than their profit. Now, here we go. Proportional EBITDA and then free cash flow 1.95 billion. That's free cash flow. Actually, I just mentioned free cash, not free cash flow, excluding capital releases. And I'm pretty sure their payout ratio is almost 100%. Opportunity pipelines, I don't care about that. Distribution growth over time. And it says here, financial year 25 distribution expected to be 95 to 105% covered by free cash. So I think, in my opinion, free cash flow is the most important thing. And according to this company, their free cash flow for this year was $2 billion. So let's calculate the valuation of this company right now. $2 billion and the markup of the company. What is the markup of the company? 2 billion is 39 billion. So you could say the P ratio based off their cash flow is about 20. About 20, okay? That seems okay. I would like a little bit more growth for a P ratio of 20. The other thing is that does not include debt. This company has a lot of debt, lots and lots of debt. Anyway, I'm rambling on a little bit more. Not the sort of company for me, to be honest with you. A lot of, I just don't understand some of the accounting. And I don't believe you should look at earnings or income. It's the cash flow, that sort of thing. But even then, I'm like, I don't know. And the other thing is the chart doesn't look that crash hot. Chart does nothing. If you look at the weekly chart, share price has done nothing for the last 5 years. Share price got up to these levels back in 2019. So it's done nothing for 5 years. This was a market darling for a long time, though. I still remember. But yeah, between 2012 and 2019, share price went from $5 up to a high of $15. So you did well in that period. And I was a shareholder of this company for a short period because, no, was it? No, I forget. Was it this? No, it was Sydney Airport I was a shareholder because they were spun out of Macquarie Group, if I remember correctly. And because I was a shareholder of Macquarie Group, I got Sydney Airport shares, not Transurban. Completely different. Anyway, so that's Transurban coming in number 5. And that little ramble went on way too long. Now, something that won't take as long is Myer Holdings. Share price down 7% today on a trading update. And I would assume, not assume, I did have a look at this, but I'm assuming the market didn't like the some of the commentary here. Now, the financial year 24 expected sales, that wasn't that bad. So comparable sales up 0.8% in the second half. For the full year, up 0.4%. So growth. Group online sales up 2%. Growth. I forgot that they're closing the Brisbane City store, which is interesting. Not sure why. Anyway, so the expected sales looks pretty good. But then the profit down by about, what's that? Down by about 30% from 71.1 million to 50 to 54 million. And then they get into a bit of commentary here. Challenging consumer and trading environment, impact of store closures, inflationary cost pressures, underperformance of 3 Myer specialty brands. So yeah, not good commentary there and not good NPAT results when the sales were looking okay. So definitely not what the market probably expected. And that's why the share price is down 7%. Now, is this a company I would own? I have traded this company in the past. So this, in my opinion, is a trading stock. That's it. And if you do have a look at the weekly chart, actually, the weekly chart doesn't look that bad. Nowhere near as bad as what it did between 2013 and 2021 or 2022. Based off this weekly chart, things could be turning around. Based off the daily chart, yeah, nothing much happening with the daily chart. No interest in this company, which is interesting because the share price went on a bit of a run in June. Did they release anything in June? Let's have a look. Oh, that's right. That was that Premier Investments thingy. Yeah, now I remember. Yep. Anyway, so no interest in Myer Holdings at this point in time, but some nice, interesting commentary there about how things are affecting the performance of the company. And none of that should be a surprise to us. So that's Myer coming in number 3. Coming in at number 2, who got number 2? Mirvac Group. This is a company I would never even think about taking a look at their results, but I did see the share price down 8 or 9%. I went, the market hates it. So they released their lots of reports here. In fact, a whole page of reports. So Appendix 4E, dividend distribution, results ASX announcement, annual report, 2 annual reports, results presentation, additional information, profit compendium, and corporate governance statements. So that's what we can expect a lot of companies to release, that many announcements. Well, maybe not that many. It seems to be a little bit extreme. Okay, so I don't have a big grasp of these results. I did have a look at them, just like I had a look at all the other results. Didn't have a close look, and I wouldn't have guessed the market didn't like it because it's Mirvac. It's just like a property company. They own property. I'm not sure what else they do. Results. The one thing I would do, let's have a look. Where's the overview? So a lot of numbers here. Here it is. Fresh results highlights. So EBIT up 12%. Operating profit down 5%. Earnings per share down 5%. Dividends per share flat. Statutory result negative 805. But that doesn't bother me because property companies' profit or loss is going to be dependent on the revaluation of their property. So I'm pretty sure Charter or Reit, their loss was pretty significant because there was a reevaluation to the downside of their property. But when they get a good property revaluation, their profit could be extreme, and then people go, "Oh, the P ratio is like 5," and it's not true. NTA of $2.36, down 11%. I wonder if that has something to do with share price down. $1.94. So it's not much. Well, it still is a pretty big discount. Where is the results? So still a pretty discount, but maybe the market was thinking it's not as big of a discount as we want because this company is, or possibly is going to have some problems in the future. Gearing 26.7%. That is a little bit lower than some of the other companies I was looking at. So Charter Hall Reit, Long WALE Reit, had gearing about 32%. Started the year, they had gearing closer to 40%, and they had to sell some of their assets to get that gearing down. And that's one of the reasons why their NTA actually dropped. So I'm not sure if this company had to sell anything. Assets under management, 22 billion. So is this a true Reit, or is it more of a property manager? I don't know. In fact, I've never had a look at this company in the past. I just know their property. What do they have? Office, industrial, retail, and living. Don't like 66% is in office. But, I don't care if the Premier of New South Wales have demanded or New South Wales government workers to go back to the office. That shows me that he has no vision of the future because the future is not in CBDs for workers. It is not in CBDs for workers. And I envisage a CBD being more residential than office in the future. We are going to have to change the way we work and live. That's an absolute. So trying to force people back to the office, and one of the reasons they're forcing people back to the office is to increase business in the CBD. But all the business in the suburbs has increased. So it's a silly strategy. Some of the other reasons they also mentioned, it helps new staff. Yeah, fine, that's okay. But there's other ways to do it than mandating everyone to go back to the office, because I almost guarantee you there's going to be people who leave, and some of the best talented staff might leave because of those silly mandates. It's a silly mandate. It's a very backward thinking mandate. Okay. Return on equity is greater than WACC. Interesting. Okay. Now, the share price is down. So let's have a look at the chart for, what's it called? MGR. Is it MGR? Yes. Mirvac. Is this a company I could buy? And the answer to that is no. Well, we knew it was going to be no because the share price was down. And when you look at the long-term chart, the answer to it is no. Why would I buy this? Now, you could argue, and this is an argument, that the share price right now is at multi-year lows or near multi-year lows. So you're getting this company at a better value. And when the good times come back, the share price could rally. The high for this company is $3.50. So possibly towards doubling your capital. And then you get on top of that, you get some nice dividends. So you could argue that. And if you do like that argument, go for it. Anyway, that's all I'm going to talk about when it comes to Mirvac, because this video is already 50 minutes long. And I still got to talk about AMP, stock of the day. Share price up 12.57%. Not only that, the chart looks good. Not only that, share price is near the high of the day. That's important. It's going to wait. If the share price closes near the high of the day, that could be further confirmation the share price is breaking out. Okay, so I did have a look at the announcements, or this is the first half, by the way, not full year results. Did have a look at the results, and I went, nah, whatever. It's AMP. It's been a horrible company on the ASX over the past few decades. If you bought this company at the IPO, you hating this company. You'll forever hate this company. So underlying profit up 5.4%. No. So I just went through these results, and nothing in the results really made me be really excited. So there is a possibility, and to be honest with you, I don't know this company much. All I know is the chart looks horrible. Company has not performed. Now, the CEO, Alexis George, did make some interesting comments here. We have made good progress this half on our key strategic commitments, and we have positive momentum heading into the second half of the year. We have continued to deliver on simplification and cost reduction, while also driving growth in our wealth businesses and returning capital to shareholders. So possibly, it's just this sort of the vibe in the company. The vibe is looking better now. Maybe the CEO is turning things around. Alexis George, I'm not sure how long she has been, pretty sure this is she, has been in this position. I don't envisage that long. Alexis George, CEO, how long? CEO AMP. August 2021. So she hasn't been in the role long, but if she has having influence on the company, now's about the time, because it's about 3 years ago, now's about the time we really should see her influence affecting the financial performance of the company. Maybe that is what's happening. Otherwise, I went through this and went, no, I just want to see how the market reacts. And then I saw the share price and went, interesting reaction. Share price up 12%. So let's have a look at the chart. This is the most exciting part of AMP. It's not the results, it's the chart. So the weekly chart, actually, let's have a look at the monthly chart first, because you get sort of a good perspective of this company and how horrible it has been since it listed back in 1998. Share price at one point got to $36. Now it's $1.28. This is a chart of a high, of a low, not a high. This is a chart of a low quality company that has not performed at all. Share price has been in a downtrend. You get these periods of time, the share price goes on rallies, but each significant high has been lower than the previous one. So it's only been 3, 2001, 2007, 2015, and share price keeps on dropping. If you look at the weekly chart, you get the same signal. Share price keeps on dropping. However, share price has been going sideways for about 3 years. So that's been sort of the reign of this new CEO, Alexis George. Share price has been going sideways. It's been wanting to go on runs, but hasn't quite made it. Hasn't quite got there. I would even say or suggest right now that looking at this weekly chart, it's not there just yet. But then you get a different perspective when you look at the daily chart. Okay, so share price up really nicely today. Share price is at least a 6-month high. The last time share price got this high was back in September last year. So there is a bit of resistance at these levels right in there. So there is a bit of resistance right there, because that's where the share price was less than a year ago, 11 months ago. So this is in a resistance zone. So if the share price can get above this level, this zone, that will be very bullish. And then if it does, the last time the share price would be that high would be this next resistance zone, which was back in late 2022. And that would be $1.40. So then it needs to get about $1.40. So this company will always have these resistance zones. But the resistance zones, the further they go back, become weaker and weaker. But you can't discount it. Volume today has been nice. Really good volume coming today. So this is a potential breakout. I just want to see how the share price goes over the next few days. And not that long ago, in fact, in November, probably at the AGM, share price dropped 15.8% in one day. Okay, so that's AMP, the stock of the day. Not much to say about the results. It's just the market reaction. Now, a few charts. I just want to show you. Civmec, and no comments today because we've only got 5 minutes. No, and Civmec. So this was definitely on my radar a few weeks ago. Share price in a beautiful uptrend, moving, going higher. A lot of chatter about this company. I think it was positive mention on Ausbiz Core. That's why the share price went on a bit of a rally. 19th of July, maybe. And then the last 4 days, share price down. Up the side of the mountain, down the other side. So sometimes you'll see it creeping slowly up, which makes sense. If you're climbing a mountain, it takes a long time. But when you fall off a mountain, it just takes a very quick time. And that's why, again, fear is much more powerful than greed. And sort of the same here. It took maybe 2, 3, 4 weeks to go up the side of the mountain. It's taken a few days to go to the bottom. But where the share price is right now, at just above $1, is interesting level. I would assume there is a bit of support in this zone. So what do I mean? So if you just go right there, you can see that's a nice little resistance zone because of what the share price did in November 2023. And then it struggled to get above that zone back in mid-July, and then it zoomed higher, and now it's back. So we don't want to see the share price get below $1. But if we do see a bit of consolidation in this level, that could be the low for CivMec. Could be. It's not a certainty. BMT, I think I've already showed you BMT. Appen, share price had a bit of a dip today. Not a big dip. I wouldn't be too concerned about this chart. It is definitely looking better. The volume, though, is just extraordinary, and it's continued high volume. So this chart is starting to look a little bit more interesting. I'm going to have to give you that. Not give you. I'm going to have to tell you that this chart is starting to look a little bit more interesting. I would be willing to trade Appen just based off this chart. MMI, Metro Mining, share price has been in a bit of a funk. I wasn't the biggest fan of their quarterly report, and it seems like maybe the market is thinking along those lines as well. I expected a little bit better numbers. And yeah, the share price is in a bit of funk. Share price has dropped from 5.8 cents to 3.7. And I think maybe the uptrend has come to the end for Metro Mining. And maybe bauxite market is taking a bit of a hit as well. So that's Metro Mining. Now, one of the things, and the last company I want to talk about in today's video is Shopify. What I've mentioned a few times in the past that one of the things I don't like about the American market is how fickle they are, particularly on the back of quarter results. And have heard it's because of pod shops. So I still don't know what pod shops are. I've heard people talk about pod shops. But one of the things I've noticed is how volatile the share price of companies can move just on the back of quarterly results. And apparently that's what pod shops look at. They look at quarterly results, good one, they buy in, bad one, they sell out. And that's why sometimes you'll see the share price of a company go up and down a fair bit on quarter results. And Shopify is a perfect example of that. So, wasn't long ago, the last results in May, share price dropped 19%. Oh, that's awful. And even before that, share price of this company is dropping or rising 10, 20% on the release of the quarterly results. So last May, down 20% on quarterly results. Yesterday, up almost 20% on the back of the quarterly results. It's just insane. Not only that, the other day, share price of this company, in fact, a week, it dropped about 10, 15%. Yeah. So it's just insane trading. And that's why I think I would find it much harder trading in the United States. In fact, one of the things I probably would do is trade. So when I do buy Australian companies on the back of positive financial results and a breakout, I have a target of 6 to 9 months, how long the benefits may last. In America, 3 months would be my limit because you just don't know on quarter results. If I did trade quarter results, I would hold that position for no more than 3 months, or I would sell out just before they release their quarter results because you just don't know. One of the reasons I don't like the American markets is just because it's way too fickle. It's just driven by short-term sentiment. That's it. And apparently, pod shops are to blame. I could be wrong with that, but that's what I've heard. So that's Shopify. Good results, by the way. They are profitable. Really nice results. Really good growth. Like 20 to 25% growth in revenue, and they've become profitable. Really good growth in margins. So it's a really good report from Shopify. Apparently, I did not know this, but Shopify is Canadian. Shopify is Canadian. The history start. How did Shopify begin? Yeah, over a decade ago, we started to sort of sell snowboards online. Yeah, I actually did hear that before. Canada. Pretty sure it's Canada. Did Shopify start in Canada? Yes, is a Canadian multinational e-commerce company headquartered in Ottawa. I actually did not know that, although I did hear the story about Shopify and selling snow stuff, but I did not realize it was in Canada. So that's one thing I've discovered today. Anyway, that's all I have for today's video because we're getting very close to 1 hour. If you have any thoughts, any questions, leave those in the comment section. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who's qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.